Good morning, everyone, and welcome to our weekly edition of the Ashworth Wealth Weekly Market Update. Today is January 23rd, 2023, and thank you all for joining us. We have just a quick slide that we're going to jump into and show you real quick. And the nuts and bolts of this is that retail sales are slowing, consumer spending is slowing. And the biggest thing with this that we're seeing right now is that from what the Fed is looking at, the thing that they have been most concerned about is retail spending or consumer spending, and they have wanted that to slow down to meaningfully show that inflation is going to start getting under control. And we are seeing that in these numbers here. You can see that both the 3-month over 3-month percentages as well as the month over month percentages, which are in blue. Both of those are down for the last 2 months and are trending downward, and should allow the Fed to soften their rate hikes a little bit in February, as they have been talking. There's a few things that are happening that are actually still good in the economy. We have Social Security that's going to be quite a bump. That's going to be pushing a lot of new money into the economy, which should help the economy stay afloat and should help the economy perhaps even not go into a recession or a very mild recession from what we're looking at. From the labor market, we watch that on an ongoing basis. That is still pretty tight, and so that's a good thing. If labor is still tight, that means that corporations are still engaged in the process of thinking that they can produce profits and have not started laying off people significantly. There are a few tech firms that have laid a few people off. The last time that I checked, it's about 2% of the labor force. And so not a ton, but there is a little bit of slowdown there as well. So as we look forward to this new year, 2023, we hope that things will continue to come back a little bit. We've already had significant gains in the market so far this year. And as the economy, we're just going to have to wait and see what happens and what the Fed does and what the external sources are. But we will keep you up to date as much as we can. And thank you so much for joining us today. We appreciate everyone coming and spending a little bit of time with us. Also, if you have friends, family, or coworkers that you feel like might benefit from these weekly webinars, please feel free to pass on those links for us. And we would be happy that that they could be able to watch this as well. So for today, thank you so much, and we will catch you again next week. Thank you.